Welcome to Be Provided Conservation Radio, sharing stories and information about the environment, wildlife, and the people who are dedicating their lives to protect the world for future generations. These inspirational stories will take you from the Santa Cruz Mountains to remote areas of Africa.
Welcome to this episode of Be Provided Conservation Radio. I am Marcia Civic, your host today. Today's show is a little different in that I am interviewing the co-founder of an investment management firm called Karner Capital. On this show, we talk about many ways you and I can make contributions to help protect our natural world in terms of volunteering, education, artwork, and donations and such. But do we really look closely at the companies we invest in, say through our 401ks, etc., in a way to make an impact for our natural world? I feel that many of us invest our money in hopes that we have some sort of retirement or safety net to fall into, but until now, to be honest, I have not looked at every company in my plan to see how they treat people or animals. Well, today's show is about making an impact by investing in companies that are doing good for animal welfare and our environment. Karner Blue is the first of its kind to pick companies for its portfolio that rank high in good animal welfare and care for the environment. By investing in companies that have these good practices, they help us make even more of a difference. This company does not sponsor our show. It is the intention of this show to give you, the listeners, ideas and options of making your own impact in any way you can. Investing for animal welfare is an interesting concept that I thought others would want to learn more about. So enjoy the show today. I am really excited to have Vicki Benjamin on the show. We are here talking via Skype to have a conversation about a few things Vicki is involved with. Vicki is the co-founder of Karner Capital, and she is also the CEO since it commenced operations as an investment advisor in 2017. Ms. Benjamin is also executive vice president of the Karner Center for a Humane Economy Incorporated. This is the first nonprofit animal welfare organization that focuses on influencing the conduct of corporations and encourages them to honor their duties to social responsibility. Welcome to the show, Vicki. I hope you and your loved ones are staying healthy and safe during these crazy times. How are you doing?
Great, Marcia. I'm very happy to be here, and we are happy and safe. I heard a funny quote this morning, or yesterday actually. Somebody said, "I'm not sure what day it is," and then another person said, "I just wake up and call it day now." So it's not. I think today's Wednesday, and I'm very lucky to be speaking to you from Bethesda, Maryland.
Yeah, it is Wednesday still, as far as I know as well. I know my days are all messed up, and I think it's really terrific that you're joining us today. I'm really, really interested in hearing a bit of your story. Your background is in business and administration, and I'm just curious how you get from there to co-founding an investment firm and nonprofit regarding the welfare of animals. There's got to be an animal story in your life somewhere that influenced you. Can you tell us that? Is there a specific story, or have animals always been part of your life?
My mother, I would say, probably was the biggest influence on my starting of Karner Blue, and I'll give a little bit of history about her and that, and then I'll backtrack into my own professional background. My mother was a real lover of animals, and I would not call her a collector. She took in strays, and she lived in a trailer, a mobile home up in New Hampshire, and she had battled with illness. Well, anyway, in September of 2016, my mother passed away, and when she passed, she had 14 cats in her trailer with her.
Wow. There
was Buddy the AIDS cat. There was a little girl who was a stray, little boy. I mean, she had so many cats. They all had names like Mama Kitty, little girl, little boy. And many of them were ill, but one, Mama Kitty, was a feral cat. And my mother found her. She was 6 months old and pregnant, and Mama Kitty had 13 kittens.
Wow.
And my mother was able to find homes for all but 8 of them when she passed. And the kittens were still quite young when my mother died. Anyway, so my mother had 14 cats, and I was able to give away all of them find them nice homes, with the exception of Mama Kitty, who you heard right before this podcast, because Mama Kitty was a feral cat. Mama Kitty is a little unpredictable.
She was feeling the shelter in place with you there.
She was. Her behavior is a little, like I said, unpredictable. And so anyway, that was 3.5 years ago, and poor Mama Kitty is now lives in an apartment and gets out on the back balcony once in a while, but her life's certainly different. And just finally with my mother, I was cleaning out her belongings, and I got a phone call from Voices for Animals. And they're like, hi, and this is Candy, I remember her name. And she says, is Jane there? And I said, no, my mom passed away. And she goes, well, I guess you're not going to want the kitten she signed up for. And I said, are you kidding? My mother has 14 cats in a trailer in Rochester, New Hampshire, and she was on a list to adopt a kitten. So I was always tenderhearted. And when I saw Bambi, that stopped it at 5. I remember where I was, what I was wearing when the mother died, and my parents took me out of the movie theater at that point in time.
I know that's a traumatic movie. Yeah.
I haven't watched an animal movie since. So my staff, if I see a movie that I think or a video, I send it along. It's not real fair. And all my life, I've had different animals. I've had gerbils that have lived unusually long lives. And I say that just because I'd let them run around, and they were like my best friends. And many cats. I've had pygmy pigs. They've always been my best friends. And so I've always had a special feeling about them. And I was not scientifically inclined. So I had thought I'd go to vet school, but I was not scientifically inclined, although I was mathematically inclined. So that is a nice bridge into my professional life.
Yeah. This is a good bridge into us talking about how Karner Blue was created and what got you there. If you can share a little bit about that, and we'll get into talking more about Karner Blue and the work that they're doing as well. How's that sound?
So I was a partner at KPMG in Boston for 10 years. And during that time, I was the lead partner on some very large clients. Although still young, I decided that as much as I loved the work and accounting, I knew that I needed to do something a little bit more with the rest of my life. And so I saw an opening at Calvert Investments. And for those of your listeners, Calvert Investments was the oldest socially responsible investment firm in the U.S. And socially responsible investing is a little different, and I'll make this very brief, what most financial advisors do. I mean, most financial advisors have a basic objective to provide the best financial returns for an investor based on their risk preferences. Socially responsible investing is based on two principles. One is you invest in companies that do well, and you assume that your investors will do well because you're doing good. And it can be just generically, like one might say, environmental, social, and governance pillars, ESG pillars, are generically good. But then socially responsible investing, and this I think will be of particular interest to you, also includes a component of corporate engagement, whether that's calling companies to ask them specific procedures and policies, or whether it's as much as writing a letter to their board of directors if you're not happy about their transition out of gestation crates, or it's actually at the very end when all efforts have failed, putting a resolution on a proxy to go to shareholder votes. So Calvert was the oldest of any entity in the U.S. to do that, and had launched the first mutual fund using those principles surrounding anti-apartheid, in the early 80s. So I felt when I joined Calvert in 2015, I had found my place. And once you get to the place that you're supposed to be, it's really amazing. You know you're there. It's just something you know. So I took my job on with a zeal and an enthusiasm that I hadn't had in a very long time. And unfortunately, during that time, the very first few months of being at Calvert, there were some regulatory problems relating to previous management. I was the CFO and the chief operating officer, and I was hired under a new chief executive officer. And there were regulatory problems that we could solve, but the holding company that owned Calvert, which had $14 billion in assets at the time, decided this is going to be a lot of work, a lot of trouble, and we might have a run on the assets. We'll sell the firm. So the firm was sold in effective 12/31/2016. My mother had passed the day that I needed to lay off the folks in September of 16 from Calvert, because a lot of the people were not retained by the acquirer.
Oh, that's hard. Yeah.
That's really hard because I had moved from Boston down here to Bethesda. I'd moved my family and lost my mother and lost my job and a couple of other health incidents. So one could say, Marcia, on 12/31/2016, Vicki Benjamin was at a very major, sad crossroads.
Yeah. That sounds like it.
I said, okay, that's all really sad. I'm going to do something meaningful with what I've learned about socially responsible investing. And I looked around and I said, my goodness, people are doing things with fossil fuel free funds, gender lens funds, fair trade. No one is doing anything with animals. It's shocking. So the concept of Karner Blue was born. So I brought in my general counsel from Calvert as a co-founder. We started the entity. It went through a variety of variations. It started out as Living Planet, One Planet, because it's producing strategies centered around improving the lives of animals. So everyone's thinking rhino, elephant, this, that. And we're like, no, we gotta. And we came up with this tiny little butterfly, a blue butterfly that was on the endangered species list. And through the work of many stakeholders, conservationists, academics, individuals, volunteers, they were able to bring it back from extinction. And it survives well today, and it is very indigenous to my home state of New Hampshire. And we said, wow, that's a great name. So Karner Blue was born, and then we created the logo from there, which actually does have the elephant in with the butterfly. So
yeah, I'm looking at your website right now, and I love that the butterfly is just flying around the page. And I wanted to ask you about that.
It's amazing, Marcia, when you start a business on your own, you love it and you do a lot of things that you're not aptly trained for or educated for, but you do your best, right? So A lot of what you see is our passion and our love for the animals and our true need and belief that if we don't do this, it might not get done. And that is using the capital markets to improve the welfare of animals.
Okay, great. Let's get into maybe a discussion about how using the capital markets can improve the welfare of animals.
So back in January of 2017, with Andrew and I looked around and saw that the investment management landscape was missing a focus on animals, and we tried to figure out why that would be. And what we found was that not many companies report on their use of animals, meaning you don't know how many animals are or how they're treated in agriculture, right? So how many pigs are in gestation crates, or how many veal cows are slaughtered, or how many mice are used in research labs. And you don't find out much in the ecological environments either, right? What their impact is or the devastation that's done in the extractive industries. So we said, okay, if they're not reporting that, then data providers can't package it, and provide products that can go to the masses. So a lot of what's happening, and I'm sure you're familiar with the term of ESG, environmental, social, and governance, investing strategies. And those are really built around data that's pulled by data providers on key indicators relative to environmental, social, and governance factors. Like, for instance, how diverse a board is. Do you have child labor in your supply stream? That's a social indicator. And then, of course, environmental, the main one is greenhouse gas emissions. So we said, okay, we're going to have to do the old-fashioned way like Calvert did. And that was, we're going to have to do bottom-up research and benchmarking companies. And the way we're going to do that is using sustainable data from their sustainable reports, the sustainability reports, calling them, reaching out to non-governmental organizations who are a pool of research information. And we're going to have to try to piece together information to determine which companies treat animals better.
That has to take a lot of your resources and time for research.
Well, we started, like I said, early 17, and of course you have to build infrastructure. But we started researching early 17. We reached out to Anti-Vivisection Society, Rainforest Alliance, Humane Society was helpful, Compassion in World Farming, Faunalytics, people. And what's amazing, although the animal advocacy space is large and somewhat divisive, these people rallied around us to help us because they knew that no one else was doing this. And that if you can harness the money, the capital in the capital markets to move forward the welfare of animals, and everyone was backing that. And so we had a lot of support from NGOs who would help us look at our key performance indicators and help us build our frameworks for evaluating companies in different industries.
So how many companies do you have in your portfolio at this time?
We have 102 in our portfolio at this time, but we're trading it especially during this volatility. So that number was the number a couple of days ago. The number could be different now. But you asked a minute ago, that takes a lot of resources, and it does. I have 12 researchers working for me doing research, and they're industry specific. So they, depending on the size of the industry, they have to evaluate all the companies in that industry and benchmark them against each other. So the number that we started with was 7,000 companies, and that included public and private entities. It's a lot.
Yeah.
That's why it's taken us a long time.
Yeah.
And to get it right, the good thing about, so when you're doing something the first time and no one's done it, you can't be wrong, right?
True. Yeah. You're kind of paving the way. Yeah.
Yeah. So the first iterations in 17, we look at them and we kind of like, well, it was a good shot, but we didn't have an investment product produced until August of 2018. So it was a full year, 18 months of researching, talking to companies, engaging with NGOs before we had developed a product that was really based on all of our research and was validated by our engagement with outside entities.
Interesting. So you choose like a company that you think would be a good fit, and then you put them through some screening questions, probably look at their portfolio. Is there a specific a list of criteria that you follow for vetting these?
I'll walk through it and please ask questions if I'm not clear.
Okay.
So we start out with the universe of public and private companies and global companies. So that universe is approximately 7,000 companies. Out of that, now, and that's representative of all industries. There's about 35 industries. So we look at the industries and we say, gosh, not all of them touch animals or indirectly affect animals. So we like to call it 1 degree of separation. So for instance, agriculture touches animals directly by using them and using them for food. Mm-hmm. And then pharma, household and personal, and chemicals also touch animals directly through their animals and science testing on them. Other industries touch animals indirectly through habitats. And as you know, the largest cause of extinction for animals is due to habitat destruction. Mm-hmm. And a lot of that is caused by company and corporate extraction industries and interceding in our environments. So out of the 30 or 35 industries in the overall capital universe, we honed down and found 14 industries that have animal impacts. And so those are in food and ag, retail, chemicals, construction, pharmaceuticals, household and personal products, travel and leisure, waste and wastewater utilities, paper, metals and mining, textiles, oil and gas, and renewable energy. So those 14 industries came out of the 7,000. Those are industries of impact. So that represented about 2,600 companies. So we take those 2,600 companies and we do an overall ESG screen, meaning anybody that fails on basic environmental and social and governance issues and ratings is not going to make it into our portfolio. So we screen them out. Our hypothesis, and has so far proven true with the exception of maybe 1 or 2 companies, is that animals are the last consideration. So companies that do poorly on environmental and governance issues are not going to do great on animal welfare. Mm-hmm. So
makes sense.
I mean, and a friend of mine who owns a large socially responsible investment firm, he said, Vicki, you're not going to be able to sell a product if you've got companies in there like Exxon or, Mobil that have horrible controversies or bad environmental practices. Yet for some unforeseen reason, they have great animal welfare. And I said, because you've got, you should apply a screen. And that makes sense to me. So we do that. Mm-hmm. And what we do, though, is we doubly count environmental, because, of course, environmental is so much more impactful on animals. So by the time we have taken that, and you'll see that we take that 2,600 number by applying overall ESG screen and a double count on environment, we end up with 600 companies that have actually made it through, that are in the industries of impact and have made it through a ESG threshold.
Wow, out of the 2,600, that's amazing.
Yes, okay. Yes. So, well, think about it this way, Marshall. When you're talking about food and beverage, and you're talking about pharmaceuticals, we're not talking about pillars of corporate responsibility. Mm-hmm. I mean, these are the best. These are what I like to call, these are the nicest houses in really bad neighborhoods. So for those 14 industries, we've developed models that are industry specific. And this is going to dovetail into our conversation about the pandemic. Yeah. So it's an important point.
That's great.
But those industries, I'm sorry. So under those 14 industries, though, we built individual models with as many as 100 indicators to evaluate their animal welfare performance. And so, for instance, in agriculture, we look at the use of antibiotics. We look at the 5 freedoms, which includes the confinement of animals, the space they're used, that they're allowed. We look at commitments they've made towards removal of gestation crates, the elimination of battery cages, the cage-free, their commitments to their animal initiatives. And so each of these models are developed industry specific. And from that, we give them all a specific animal welfare score. and calculate a mean for each industry, and then evaluate further those companies that perform above their industry mean on animal welfare.
Okay.
So that gets us down to 169 companies, and from then we perform a financial analysis and a controversy review. So there are certain companies, and I'll give you an example. Nestle, for instance, you may, being very animal centric, you may remember back last September, Nestle had an issue with one of their suppliers, which was in one of their dairy farms, which was videotaped abusing cows.
Oh yeah, I remember that.
So we were immediately on the phone with Nestle. Nestle was in the portfolio. We said, oh gosh, we got to pull Nestle out of the portfolio. And we thought, okay, that's a controversy. And that's our highest level controversy, those that involve animal cruelty. And we called Nestle. Nestle's actions couldn't have been swifter. They had a public statement. They fired the supplier. I mean, so sometimes you can't expect that, especially with some of these larger companies like Danone and Nestle, that all of their controls and oversight are going to prevent isolated instances. So we look at controversies and screen out companies who have controversies that are of a large magnitude, that weren't mitigated, weren't addressed by the company, and also may or may not have been repeated. So our companies go down from 169 to 112, and then they're further fine-tuned for financial analysis. The last point that I want to bring about our research process is that when I first started out, I said we start from a universe of 7,000, and then we go down to 2,600 because the 2,600 are representative of our industries of animal impacts. Well, we don't just throw away those 4,400 companies. Much to the chagrin of my analysts, we scan and go through all of the other 4,400, looking for companies that create opportunities to improve animal welfare outside of their business operations.
Oh, good point. Yeah.
So we've picked up, for instance, and a lot of folks don't know this, Microsoft and Google are part of a consortium that searches out wildlife traffickers using their search engines and using certain lexicons to report them to authorities. And we found that a lot of our wildlife trafficking exposure is coming in through our opportunity companies, and many of them are in the tech sector. So IBM is another one. Tesla is in our opportunity sector because they are the only auto distributor and manufacturer that only uses vegan products. So there's no leather in the Tesla car. There used to be on the steering wheel, but they've evolved from that.
Yeah, I didn't know that. Okay.
So that is the research process. So if we were to move down the line of, and the point being that we believe animal welfare is a social issue, and that how societies treat animals is reflective of the society itself. And that poor animal treatment leads to other societal problems.
Right. That kind of leads us into what we're dealing with today, I think.
It does.
With the COVID-19. So just a quick question before we get into the COVID-19 or the treatment of animals and how they affect us. I just wanted to ask, is this a product developed just based on animal welfare?
It's not. It's based on animal welfare. It gives me a universe of securities. However, I have a portfolio manager and a portfolio analyst, one of which, who is ex-Calvert portfolio manager, that analyze it for financial criteria. And we're always looking for quality for a price to provide alpha and outperformance for our investors. So as much as, and maybe I should say this online, but as much as the animals are important, the investors are our first priority. We want to provide financial returns to our clients, and by helping animals.
I wanted to talk a little bit about the recent press release I saw of yours. Karner Blue, it's titled Karner Blue Capital identifies animal welfare and biodiversity as key factors in preventing the future pandemics. And so you're trying to call together, like you're an investment leader that's urging a collective reassessment of our relationship with animals to fight these global outbreaks of infectious disease.
So our treatment of animals, our poor treatment of animals is causing large macroeconomic problems. For instance, climate change is causing loss of biodiversity.
Right.
And we don't need to discuss, how important species diversification and biodiversity is from our own beings.
Mm-hmm.
But it's also spurring the creation or the unleashing, I guess I would say, of zoonotic diseases. And zoonotic diseases are those that pass from animals to humans. And we're seeing now that 40% of new diseases, basically 60% of all new diseases are zoonotic, and 40% of those come from wildlife.
Wow.
So those diseases. So why is all of a sudden? And I was thinking about this a couple of weeks ago. Are we seeing? And I believe the trend will continue to accelerate.
Mm-hmm.
More diseases coming from wildlife, and it is really an offshoot of the things that we did to cause climate change are now causing the unleashing and amplification of viruses being transmitted from wild animals whose habitats are disrupted, or those animals that are transported out of their habitats into human environments. And that treatment is what's causing these problems.
Yeah, you mentioned the wet markets in China, of course, is identified as one of the sources for COVID-19. And, those animals are slaughtered. It's not a very clean environment. But it is a deep cultural thing for these people to eat that way, unfortunately. But it's also happening in our backyard, I think, too. So, because you mentioned that this shouldn't be unpredictable. Like, this shouldn't have hit us, like smack us in the face like it did. We should have been looking what's happening in our food chain.
Well, we've seen similar outbreaks in 2012 and 2005. Yeah. This one, the wet markets are. So if you think about it, and what I said was true, when you take the animals out of the environment or you disturb the environment, then you are basically, and I read an analogy, shaking the trees. Mm-hmm. You're shaking the trees of the woods, and out is falling many zoonotic viruses. And those viruses are carted back to human beings. Okay, so when we were talking about the wet markets and the fact that zoonotic diseases are being unleashed because of what humans are doing, they're interrupting the wildlife environments, or they're hunting and trapping and bringing these animals in contact with human beings. And what's unfortunate is when you trap these animals, and some of these animals in the wet markets are actually farmed wild animals. Mm-hmm. So what was somewhat very disturbing to me was that there was pangolins are in there. Those are endangered. Bats. There's been a lot of talk about bats.
Yeah, tigers.
There's also tigers, mm-hmm. wolf cubs. Mm-hmm. And you've got this mixture, a mixing bowl of species. And also you have fish in there just thrown in, or turtles. Mm-hmm. So once these animals are carrying these viruses, and for whatever reason, they are immune to the virus, but humans have not developed an immunity to these viruses. And it's not even 2005 and 2012 and earlier than that, we have seen similar viruses carried by bats to human populations. And sometimes they come directly to a human, or they can come, as it happened in Australia in the early 2000s. There was one mare that used to graze under one tree where bats where flying foxes used to roost, and somehow got infected in Australia and infected a whole stable of horses that all died of a very horrible disease and killed veterinarians. And that was from one horse exposed to a group of bats in one tree. So think about what happens when you have all of these bats, all these other animals that all carry different types of viruses. And we haven't identified most viruses. So they're in the wet markets and the animals are killed live. That's why they're called wet markets. Mm-hmm. And human beings are exposed to the virus. And the viruses are transported in many ways. They can be transported, in this case, well, this virus is especially toxic because it's transportable directly and indirectly. Mm-hmm. So you can get it from most likely a respiratory, droplets from these dead animals. You can get it from their blood. And the funny thing about this virus is where it comes out of, it tries to go into. So this is a respiratory virus. It probably came from respiratory droplets from these animals and went in and seeks out the lungs of its victims, its hosts, actually. So you have, and another thing that is so important, those animals are so treated so horribly, those wet markets, that the stress causes even a different kind of level of activity and viral activity, and suppresses. Some of them have antibodies to these viruses, but it suppresses their own even immune systems because of the stress. So when you take that and you have one person, so you're saying, why hasn't this happened wholesale? And it's because I guess it's the luck of numbers, right? Yeah. So some people get it, some people don't have it. They can't figure out exactly why that is true. A lot we don't know about viruses, much like the human brain. But one thing is true is that some people get it, some people don't. But how does this happen now? And the reason is because our interactions with wildlife from certain industries is tenfold. It's increasing exponentially. Yeah. And so you have corporations infringing and infiltrating their habitats, and then you have individuals capturing, hunting, killing, eating them, bringing them into the cities. And you have all this interaction between people and animals. It increases the likelihood of a spread of a virus. And then then someone gets that virus, and they may or may not get an infection from it, depending on their virus identity. They're able to spread it. And they spread it, and especially because of the globalization of the world, they get on an airplane, and then it's exponentially transmitted.
Yeah.
And then when you mentioned bushmeat, and I bring it back to, so we've talked about it. Really, what I consider commercial hunting and eating is the wet markets. Some of those animals are farmed, some of them are wild. They're brought into those environments, horribly constrained, confined. It creates a cauldron of virus. And then you have industrial agriculture that also creates a similar environment, and the avian flu also comes from that environment. The animals are in very close contact, and the viruses also will jump from animals to humans. In that case, the avian flu comes to mind. Mm-hmm. And then you have the corporations that are going into animal habitats, such as metals and mining, and they create roads, and they create inroads into these environments, and they kill those animals, and they also get exposed to their body parts, to their blood. And that's another way for these viruses to be transmitted. And metals and mining, logging, wood and paper products. So bringing it back to Karner Blue, we look at these industries and we have key performance indicators that evaluate the biodiversity impacts, and we evaluate companies on how they mitigate those biodiversity impacts. And in agriculture, we look at who's offering plant-based alternatives. I mean, our reliance on meat, as you and I spoke about earlier, has to be minimized. I mean, it has to be changed. For climate change, for our health, we have to move down the spectrum of plant-based meat. So we're looking at companies that innovate in plant-based alternatives. We're looking at companies that don't use antibiotics. And this is a key point. A lot of people miss the reason why companies give antibiotics, prophylactic use of antibiotics to farm animals, and that's because they treat them horribly.
Right. They're under so much stress. Their immune system's shot.
They're so confined.
Yeah.
They're so confined. You give them an antibiotic and they're not going to get sick, so they're not going to spoil the meat, right?
Right. But
so
that causes
treating the animals better.
Yeah.
You won't need to give them antibiotics.
Exactly.
So we look very closely at space constraints of animals and how the animals are treated. So then, and also look at the ecological plans of metals and mining, fossil fuels, paper and forest, and determine, and we look at the bushmeat policies of metal and mining companies, because those are the most impacted industry by the bushmeat trade. Because a lot of those villagers, as you said, rely on bushmeat. And, we can circle back to Ebola, and the start of Ebola was that chimp. And so that is why we released the press release, because we want to highlight it. I mean, it's so important that we understand our interrelationship with animals, and that helping animals helps us all, and that humanely treating animals and the environment is good. It's intrinsically good.
It is.
And it minimizes risks.
Yeah. I mean, I don't think we would be in this situation that we are in today if things were that way. If we were more stress on animal welfare than we have in the past. Yeah, it's crazy. So I think it's important too that people understand that they know where their food is coming from, what they're investing in. That it's nice with Karner Blue, investing in this, your companies are screened, you know what you're getting, and you can feel good about it.
Well, I mean, I look at palm oil, which is single-handedly, it's out of the Amazon, most of it in the South America, it's eradicating the orangutans.
Right.
And I mean, it's in virtually every product. And Bill Gates, I think you might have seen, is funding an entity to try to come up with a palm oil alternative. That would be amazing. The devastation from palm oil, it's extraordinary. So we look for instance, we grade companies on their use of sustainable palm oil and tracing the supply chain of their palm oil. So we try to ensure that we only invest in companies that produce sustainable palm oil. The same thing is true for cocoa. It's another product, but it's decimated hippos, pygmy hippos, some orangutans. It's affected some elephants in Malaysia and Indonesia. That's where that's grown. I mean, nature needs to be protected, and companies have a big stake in the impacts on them, and we do indirectly by how we consume. And consumers have to be more knowledgeable of the impact of corporations on the environment. And frankly, we all need to be more knowledgeable of our indirect impacts through our consuming behaviors, our consumption, and investors as well.
Yeah, I agree. How can people invest and get more information?
This is a product for the people, and because one out of every 3 individuals either volunteers time or money to animals, and it was important to me to offer a product that people, especially with the millennials, are so concerned about the environment and this situation, that we have what's the Animal Impact Fund. It has its own website, animalimpactfund.com. And if you mention your name, you can come in as little as $500. The minimum on the website says $2,000.
Okay.
We have 3 classes. So we're trying to offer a product that is available to everyone.
Oh, that's great. Okay. So I will make sure we have all this information on our website and show notes for this. So,
that'd be great.
Yeah, that's great. We didn't talk much about the Center for Humane Economy, but you also have a newsletter. I think people can sign up and get information through that as well, correct?
So Karner Blue Capital is one of 4 organizations. We try to address all the stakeholders that impact animals. So Karner Blue Capital is the for-profit arm that engages with company and invests in companies using principles that are socially responsible. Then we have the Karner Blue Center for Humane Economy, which is really our advocacy and engagement arm. And so it engages with public and private companies. And you might say, wow, what do private companies do? Well, private companies like Trader Joe's, which has great animal welfare policies, influence our benchmarking on the public companies, A. And B, a lot of private companies are involved in some pretty horrendous activities that haven't been publicized or have not been equitized. And that would be like horse racing and greyhound racing. So we advocate very heavily on those 2 issues to eliminate that and eliminate the corporate component of that.
That's great.
We also have a PAC, the Political Action, Animal Wellness Action, which is staffed mostly by volunteers, but they are worked on all the legislation that you've seen come out this year. This has been last year was a transformative year for animals and legislation. So Animal Wellness Action has been integral in that. And actually that picture of President Trump signing into law, making animal cruelty a crime, one of our representatives was right on his right arm. So that's great. And then we have Animal Wellness Foundation, which is our rescue arm, because you all need a rescue arm, but that is headed by a veterinarian, Dr. Annie, who helps provide indigent people with reduced rate or free veterinary services and helps rescue pets off the street in California.
That's great.
So, yeah.
You have a lot going on. Well, that's good to hear about. So
I know. It's fun. It's rewarding. And hopefully we can get it going and make a real difference and bring some attention to the plight of the animals and the wild animals. And it's really, cats and dogs get a lot of exposure, not so much for the pigs in gestation crates or the orangutans fighting bulldozers.
Right. I know. Yeah. And people the CAFOs that we were talking about, the commercial agricultural farming organizations, where most of our fast food meat probably comes from. I mean, those animals are stressed and full of hormones and antibiotics, and it's not healthy. It's not a healthy meat.
It's not a healthy meat.
Yeah.
And so someone said to me, if you're not going to, as we said earlier, if you're not going to just eradicate the eating of meat, what good is this? Isn't really going to do anything. And I said, well, why don't you tell that to the sow that's in the gestation crate, or the veal calf in the calf crate, or the chicken in a battery cage that's the size of a piece of paper.
Yeah,
it can't be all or nothing. We have to. Every animal you help is an animal you help.
Yeah, I agree. Thank you for all you're doing with that. I just had one quick question before you go that I always ask people, what gives you hope about our future with all this? Are you seeing anything, any indications of hope that make you feel good about moving forward?
I do, actually. Yeah. So we've been doing this for almost 3.25 years. And a lot of time people couldn't grasp or the idea of investing with your values or investing for the welfare of animals. And it's getting easier and easier for me to socialize that concept and to say that you don't have to give up investment returns and do well and invest in those companies that do well. And people are getting it. And for the first time, we've sent out press releases that they've, a spatter here, a spatter there. But this one really took on. And it did because it's a real thing and it's very human centric. But it does show the importance of the interconnection of nature and human beings and how impactful our behavior is on our lives. I mean, the planet and our sustainability and the generations to come. So I think I always say to my folks, because some days are better than others, out of every challenge is an opportunity, and we have to figure out what that opportunity is and use it to make the world a better place.
Yes, indeed. And I certainly hope we learn from this lesson and make things happen for good in this in this cause anyways. So yeah. Well, thank you for all you do, Vicki. And it was nice talking to you.
Well, thanks, Marsha.
Thank you for listening to Be Provided Conservation Radio. Links and resources to today's topic are in our show notes on iTunes. We appreciate your dedication and interest in protecting our natural world for future generations. If you like what you heard, please get involved by volunteering, donating, and sharing these podcasts with your friends. It also helps us to inform more people if you take a minute to leave a rating or review on iTunes. Have a great day, and thank you for listening to Be Provided Conservation Radio.